Black Swan activated. The markets just died. Literally, I'm not joking here. Something very strange just happened, and if you weren't watching it live, you probably only caught the aftermath on Twitter. But the way this is being framed right now, this story could easily balloon out of proportion. And if it does, the ripple effects for metals, derivatives, and the broader system could get very interesting, very fast. Here's what went down. Unusual, Whales and others started posting that CME has halted futures trading on stocks, currencies, and other markets, citing data center cooling concerns at a provider called CyrusOne. So we're not just talking about a single product. We're talking about a major chunk of the futures system going offline for a few hours. Now, on paper, that's already a big deal. Markets don't just take a break in the middle of high-volume trading sessions, especially not in 2024 to 2025, when infrastructure is supposed to be overbuilt with redundancy. But what really set people off was the timing, because this halt didn't happen on a random quiet day. It happened right when silver was on the verge of a major breakout. And I don't mean just any breakout. If you pull up a monthly chart of silver, you're not looking at a few months or a couple of years of consolidation. You're looking at a massive structure going all the way back to the 1980s. That's a multi-decade range. We're talking more than 16,000 days of price action forming what looks like a giant cup and handle pattern. Silver was literally sitting at the edge of that breakout zone. And right there, at that point, CME shuts things down. Now, officially, the line is simple. Due to a cooling issue at CyrusOne data centers, markets are currently halted. Support is working to resolve the issue and will provide pre-open details as soon as possible. That's the polished version. Nice and clean. But when you pair that with the technical backdrop on precious metals, especially silver, it starts to feel a lot less random. Because at the same time, there's already a narrative building that precious metals are about to break out. Gold pushing higher, silver lagging but structurally coiled, and a growing belief that the metals are one of the few true hedges left if something cracks in the system. So when silver makes a big move toward a historic breakout, and right then CME halts multiple markets, people are going to ask questions. And they are. Some are openly saying this is a mechanism to stop the breakout from happening. Others think it's about giving time for big players to reposition before a vertical candle prints. And it doesn't stop there. You have COMEX data issues being reported. Due to exchange-related issues, we don't receive real-time data. The exchange is working to resolve the issue. So now we've got halted markets, data issues, and all of this just happens to line up with silver approaching the edge of a multi-decade pattern. On top of that, gold is also showing signs of wanting to push higher. You don't need to be a conspiracy theorist to say, okay, that's weird. Some traders are already connecting this to something bigger, possibly to regulatory angles or to broader system risk. And whether you agree or not, you can feel the tension building in the narrative. Because here's the key idea. If silver truly takes off here, many see that as a signal that the end of the current system is very close. Not necessarily end of the world in a literal sense, but the end of the current financial arrangement, the current illusion of stability. The thinking is simple. You don't build a technical pattern for decades and then casually break out on a quiet Tuesday with no trigger. For a move of that scale, people expect a Black Swan event, something that shocks confidence, that forces capital into safe havens, that exposes hidden leverage. And silver, in that story, doesn't just go up. It explodes during the collapse. So the logic some people are following is, silver is on the verge of a historic breakout. A cooling issue conveniently halts futures markets. Data glitches appear around the same time. Gold starts printing weird $40 liquidation wicks down and instantly recovering twice. And all of this happens while there's heavy talk about a possible global crash, AI bubble, and a plummeting Dow-to-gold ratio that historically precedes major shocks. Is this all coincidence, or is it controlled? Now let's zoom out a bit. There's a view, and a lot of you share it, that gold and silver are being accumulated quietly by big entities who see what's coming long before retail does. We're not talking about small traders stacking a few coins. We're talking about institutions, banks, and ultra-high net worth players who know that if confidence cracks, you want hard assets, not just paper promises. The argument goes like this. If these guys are preparing for something ugly, either inflationary or deflationary, they're not going to announce it on TV. They're going to buy in silence. And if price starts to reflect that too quickly, you might see events that conveniently slow things down. That's where the CME story gets darker. A commodity trader reportedly said the glitch excuse is BS. According to him, the silver futures book was very thin, and then a trade cleared the entire offer side with no quotes left. In other words, the order book got nuked, and price was about to jump hard. His version? CME halted things to give market makers time to reposition and avoid a ridiculous print off the charts. In plain English, the system paused to protect itself. Now think about the physical side. Some people are saying this outage is just a disguised way of saying, we sold silver we don't actually have. That's the age-old criticism of the metals market, that for every ounce of physical silver, there are many times that in paper claims. And if you ever get a true rush into physical, something has to snap. Layer that on top of the official explanation. The CME operates out of a data center setup that reportedly has N+2 redundancy and cooling, meaning even if one component fails, there are two backups to take over. The cooling system is designed to handle simultaneous failures. And yet, we're supposed to believe that at the exact moment silver is about to break out of a pattern that's been building since the 1980s, everything just happens to fail at once. You can see why people don't buy it. So where does XRP fit in all of this? For me, the ranking stays the same as I've always said. First XRP, then possibly gold, then silver. Gold is a classic hedge. Silver is the more volatile, higher beta play that tends to be lagging but explosive once it finally moves. If someone is purely hunting for return during a systemic reset, silver can be interesting. But in my personal view, XRP is the core piece, the asset most likely to sit inside the rails of a new system, if that system is rebuilt around faster, more efficient settlement. That's not financial advice. That's my opinion. Some of you are already diversified. You hold XRP, you hold physical gold, and you hold silver. And if the thesis plays out that precious metals rise sharply during a crisis, and what we just saw is the last big manipulation or controlled halt before true expansion, then yes, this could be the prelude to something much larger. In that scenario, XRP doesn't stand alone. It becomes one part of a broader reset, where metals, select digital assets, and real-world collateral all reprice as confidence in the old system breaks. Now add one more piece. Someone pointed out that this CME event affected around 90% of global derivatives trading when it froze. That's massive. Imagine what happens during a true great blackout, not a few hours of futures downtime, but a prolonged disruption of financial networks, connectivity, or power. In that kind of environment, you want a bit of cash on hand, exposure to hard assets that don't need the internet to exist, and digital assets that are deeply integrated into institutional rails once the system reconnects. That's the kind of scenario some people see this episode foreshadowing. So here we are, silver on the verge of a multi-decade breakout. CME halts markets citing a cooling issue. Reports of thin books, massive offers being cleared, and a halt that looks more like a controlled pause than an accident. Gold throwing long liquidation wicks and recovering instantly. A Dow to gold ratio signaling that something big could be coming, and big players quietly stacking metals while the official story gets more vague by the hour. Is all of that just bad luck and random timing, or are we looking at narrative management instead of honest reporting? That's the question. Personally, I don't believe in coincidences when billions and trillions of dollars are at stake. Money doesn't move randomly. And when infrastructure fails at the exact moment a key asset is about to send a historic signal, I pay attention. So I'll leave you with this. Was this a genuine technical failure in a highly redundant data center, or a controlled halt designed to avoid an off-the-chart silver breakout at the worst possible moment for the existing system? And if a black swan really is around the corner, where do XRP, gold, and silver sit in your plan? You decide.